Welcome everyone, this is John Person. We're going to do a recast recording of what we were discussing in Las Vegas at the Traders Expo amongst all the technical difficulties we had. Traders Expo were just such an outstanding organization. They invited everyone to come and to join us today for kind of look-see into what we were going to be discussing. So I see there are a few names here for folks that were at that event. So Paul says the Vegas presentation was good nonetheless. Had we had everything else to share with everybody, I think we would have really been insightful at the time. James says he spoke with Jeff Hirsch, and I've got news for everybody here. You know, and there's a lot of people in the audience that to my surprise, had never heard of me before, and I think it was a refreshing, at least for some of them, you know, that have never seen someone before, never heard of someone before, and with all the hype that's out there in the world, you know, it's like, who is this other guy? And so I am that other guy. I'm John Person, and welcome here, everybody. And what we're going to try to accomplish today in a short period of time is some of my criteria that I scan for and to look for trade opportunities. Many of you may have just heard we just closed out a trade for PA Stock Alerts, and the stock was Cablevision. The symbol was CVC. We got in at 1533, and we just got out today. We tried to get out at a higher price, which actually hit our profit objective in the overnight in the pre-hour session this morning, but the market opened lower on our stock, and we bailed out this afternoon at 1677. You probably got 78 if you received your email alert a little bit later, but nonetheless, in at 1533 on CVC, out at 1679. That trade we got in last week, that was just a quick little swing trade. I'll kind of go over how we came up with that particular trade because it was just, you know, it just happened. So, and also what our scan criteria are, what we're using to help us identify a lot of trade opportunities. So with that said, let's get started. All right, so we do need to disclose that trading, there is risk of loss involved in the markets, and so I need to make sure everyone knows that this is a presentation. It's educational in content, and it's very important that you understand that sometimes stop loss due to market conditions, gap higher openings, gap lower openings, the stop loss will not limit your intended loss. So stops are a tool that are never a guarantee, and I think you can say, the one thing you can say is you cannot say the word guarantee in this business. So just thought I'd make sure that you all were aware of that. Okay, so who am I? For those that came to Las Vegas that are joining us right now, at least you had an introduction to who I am. There were many people that, you know, after 15 minutes of problems, 30 minutes of problems, 45 minutes of problems, finally 50 minutes, and we had a gentleman from the audience that came up to the podium to try to help me out, and he couldn't do it either because, well, it wasn't my laptop. As you can tell, I'm using the same laptop right now projecting this presentation to you. So the long and the short of it is they did have a lot of issues there at the Caesar's Palace within their audio-visual and internet technology group. So with that said, for those who have never seen me before, I started, actually, I'm more than a 33-year trading veteran, but I've been in the business since 1977 when I got my first start at the floor of the Chicago Mercantile Exchange. I worked for Packers Trading back in the day as a runner. What isn't here is what's probably missing is a bunch of stuff through my career, mainly that I worked for George Lane, who was the creator of Stochastic. So if you're familiar with Stochastic's indicator, George, I worked for him for about 2 years. I've worked under the, the tutelage of a chairman of the Chicago Board of Trade. I've owned my own brokerage firm. I've developed my own indicators. Many of you probably use them on ThinkorSwim platform, two indicators called one person's pivots, the other called PPS, We have scanning criteria that we have programmed into different platforms, from Bloomberg terminals for institutional accounts. And we've written many books, including the Commodity Traders Almanac, but my most prized possession was when I first introduced the world to combining candlesticks and pivot point trading triggers nearly a decade ago. And now pivot points are used globally, and there's a lot of educators now that use them. Many of them had learned from me and did pick up a few techniques there. So it's definitely helped a lot of investors throughout the decade. So with that said, I began trading options actually back in 1984 when they first were introduced on Treasury bond futures. So it's not like a passion I just started to learn about. Options, I discovered how to leverage your leverage with limited risk, defined risk strategies darn near 30 years ago. So it's been a wonderful ride, been a long time. I've won several live trading challenges. We just don't really talk about them because to me it's not a real big deal. But we had some of the bigger names in a Fort Lauderdale event several years back. There's only one guy that actually, and it's just hit or miss. Sometimes you make money and sometimes you don't. It's just the luck of the draw of when you do hit these things. In Germany, I was just in Germany against 5 other top-notch traders, came in second place. I've received a gold trophy, as you can see here, from for my work in technical analysis. And I was a voted member, which you have to be voted in to be a member of APTA, the American Association of Professional Technical Analysis. It's a subdivision of MTA. I have held Series 30 and 3 registrations, and I'm currently registered with the CTA as a CTA which is a commodity trading advisor with the National Futures Association. So I've been around. These are some of the top books that I've written. The one that I'm very proud of was the one that started over a decade ago, A Complete Guide to Technical Trading Tactics. And in fact, what was contained in that book, folks, that was not a book I wrote to write a book. That was actually based off a trading manual that I was training my brokers learn how to trade. And then after 9/11, when the commodity business kind of just imploded and we closed the brokerage firm down, and I just had that manuscript and those teachings from what I was trying to create a trading group. So that's where a lot of the information came from, was not from writing a book, but yet teaching my brokers how to trade. Mastering the Stock Market, this book just came out and was voted by the Stock Traders Almanac the best investment book for 2014, which I'm also proud to say Stock Traders Almanac just dedicated the 47th edition to me. And I tell you what, I found this out. I knew they were giving me the honorary award of the best investment book for 2014. I had no idea that they were honoring me with dedicating the actual Stock Traders Almanac book to me. So if you've not heard of me before, if you are familiar with the Stock Traders Almanac, it is one of the oldest and most respected financial publications that's been around. And I mean, Ken Fisher to John Vogel to, I mean, the names on the who's who list, I was quite honored. In fact, another honor was when we were in Germany, Traders Magazine did an 8-page article, an interview on me and the style of trading that I do. So enough of the accolades, but I just want, for those who are not familiar with what I've done, and I just didn't pop up into the scene 2 weeks ago. Believe me, I've been around a long time, and there's a whole list of articles and magazines and all kinds of things that I've done through my life, and of course been on CNBC and all that kind of stuff. But what really is interesting is seeing how the market right now is evolving, and also to see what products are evolving. Several years ago, we would never have put out a tweet. And in fact, I just want to share this with you real quick, because this is kind of where we get the information from. I think that's one of the important elements to look at. So our website, personsplanet.com, if you click over here on the Twitter symbol, and we can click on this and just share with you real quick. I put out these tweets, and if you're interested in some of the tweets, then what you just fill out your name, you get you just get a tweet alert when I send them out. So basically, last week, and you know what's neat about these, they're all time stamped and they're pretty nice to you know, in order. Last week we do this Trading Triggers University class in our what we teach our traders. We talked about doing credit call spreads because I was starting to see some and using the best of the best indicators that I'm sharing with you today and what I tried to share with you in Las Vegas. We were starting to see, you know, signs, evidence, not the putting the finger and look for the wind blowing which way, east or west is the wind going, that I think the market can't go any higher, but testifiable scenarios that we were looking for some type of a pause in the acceleration of the market, the stock market. So we put out this alert on November 26th, talking about lightly selling the 81-83 credit call spreads in the December on the spiders. It's all spelled out pretty clearly here. And as it says here, I'll wait till Friday to add. So, you know, we get into Friday, and not only do we talk about Friday, but I also say now's the time to consider January TZA, and that's the inverse ETF on the Russell. Also, you could look at the in-the-money calls, use a 50-60 delta or higher, or you could look at what we were doing was the January 19 calls. They were slightly out of the money though, but they had that 50 delta, near that 50 delta for the January, which gave us plenty of time to get through, and also look at the December IWM credit call spread. So, you know, this is just something we kind of talk about. My traders know what they should be looking at, but at least they got the alert, and this is what we could look at. That was not done that was first thing in the morning, 7:45 or so in the morning, and as you start to look at some of these tweets, you'd say, wow, check this out. You know, we talked about the, you know, at 10 a.m., we talked about, look, key reversal day in equities that we added to the credit call spreads, and now the Russell 2000, we have a low close doji on a specific time period, and I'd like to tell you that was a 4-hour time period, 4 hours, half a day. So we looked at that, and that's what we put out for. Not only do we look for the setup, but we put out the warning. So how did we come up to that conclusion, and what is some of the information that we used? Well, I used this screen when we were in Las Vegas, and some of you may recall that on this page we have, this is my professional package on Trade Navigator, Genesis, and what this has is the S&Ps, the NASDAQ, the Russell, the New York Stock Exchange Composite Index, and the Dow. I have daily charts on top. I have weekly charts on the bottom. So on the bottom, weekly charts with our longer-term pivots, and we also have, respective of each individual index, we have an advanced decline that is unique to that index. So the advanced decline comparative ratio, this is for the AD line on S&Ps, the NASDAQ, the Russell, the New York Stock Exchange Composite Index right here. ADC is what that stands for. And then we have the advanced decline on the Dow Jones Industrial Average. By the way, today we did generate a PPS sell signal on the S&Ps and the Dow, incidentally. And we are, last week we formed a weekly doji formation, and we are trading almost in every single index at its quarterly respective pivot points, quarterly pivot point resistance target. So knowing that and looking at some of these advanced declines and the on-balance volume, we started to see that there were some divergences occurring in the marketplace. So on-balance volume is one of the scan criteria that I look for, because volume bars, volume histogram bars, just aren't as accurate and don't depict, you know, the overall volume situation. From a trending situation, notice that the on-balance volume is moving lower, and notice from the peak that we see here with the advanced decline, we are headed lower. So prices, as from this last peak, prices were moving up, as you can clearly see, but yet we did not have breadth participation, and we did not have market participation as measured by on-balance volume. So that was one of the key reasons that, yes, we had a setup because the markets were at its quarterly pivot resistance on a longer term perspective. This is the quarterly pivot resistance, and then we had not only on the daily, but look at the weekly. We're starting to see an erosion of the advanced decline, a subtle erosion on the advanced decline. As you can see, it did not accelerate to the upside with this price move in the last 3 weeks. So we were getting a little bit of divergence there, and that was telling us the market, that there wasn't a widespread rally market participation, so it was time to take some type of action in the market. And if we do go from a strong trend, typically what we'll find is that we go in from trend to consolidation, and before we very rarely do we see markets show these spike tops where like a V bottom where we get this straight up and straight back down. Very rarely do we see that. If anything, what we might see is, and I think in this case, is a slight pullback in the market and then some gyrations back and forth. But until we get an actual deterioration in the AD lines, folks, that we make lower highs, which we have, we now need to make lower lows, which we don't have. So one of the things that I think is, if we take a look at on-balance volume, we need to look at the same thing. We need to see a sell-off that comes on accelerated volume. And so what would be the first sign of an accelerated volume move? And that would be, obviously, and I'll share this with you. We'll line this up together. All right. So if the market is truly going to be bearish, then what we need to see is, A, we want to see the breadth breach this support level, and that would be, at the very least, breach that support level, which we're just tacking into right now based on today's action. We also want to see the market, if we are going to make lows, if the market's going to give us a sustainable sell signal, then we want to see the on-balance volume do what it's starting to do right now before your very eyes. We've made lower highs. As you can see on the indicator, we've made lower highs. Does everyone agree that these are lower peaks in volume levels? Everyone see that? Okay, great. First off, I want to answer a question here. It says, Peter Hallman says, is there a revised edition of Mastering the Stock Market in Amazon? No, there isn't. So the reason they gave it the best book of 2014 is because the Stock Traders Almanac, they review books. When the book came out, it came out at the end of December. No one bought the book for Christmas. So it was really, even though it was published in December of 2012, it was like December 28th of 2012. So by all essence, it was like, the 1st of January of 2013. So by the time they got a hold of the book and the committee read the book, reviewed other books, it's not like they have to review, one book and it's just like, hey, pat John on the back, it's a good book. They actually review a lot of books, and it's a committee. It's not just Jeff. It's his father and a couple other individuals that are on the review committee that give the book its credentials. So that's why it made it in the 2014 issue. So it's a book that will stand the test of time. So if you do have Mastering the Stock Market and you bought that book, it's the same book. It's relatively new, and it's certainly applicable because a lot of the techniques that I'm sharing with you today are in that book, by the way. So let's continue. I hope that answered your question there, Peter. All right. So we have a consecutive series of lower highs, and the funny thing is we have a consecutive series at the same time. If you line up the stars, so to speak, this day's close was on when we made that peak in on-balance volume, as well as that peak in the advanced decline. Everyone sees that, right? Next, we line up our stars and we say, gee, based on this close right here, that was kind of a warning sign. Look at the advanced decline. It didn't make a higher high, and the volume didn't make a higher high, but prices made a higher high. Then we extend out and say, well, what about this? We certainly have a new breakout on a closing high right here, but there's no volume associated with it. And certainly with a higher high, one would expect to see the advanced decline at least exceed that level, and it didn't as well. So at this point in time, we have lower highs. Now we got to see if we get lower lows, because price right now is lower than that point in time, and we got to see, obviously, the advanced decline tonight, when we get our update from Genesis, it will update, and I guarantee you we're going to see a decline in the advanced decline level that will exceed that low. So right now we already have a lower reading on the advanced decline, but it was the divergence of higher prices, and it was the quarterly pivot that was alerting us that we should be looking at least a pause in this market that might last, you know, maybe a 1 to 3% correction, and we should probably get anywhere from, I would imagine, on average, 3 to 10 days. I think 10 days might be a little too much, but maybe 7 trading days, which would be going into next week. So we have the unemployment report. We got an FOMC meeting, and so I'm not really expecting a huge decline in the market unless we get building evidence. Right now, as you can see, I only have 3 indexes. The NYSE, which has been in a PPS sell signal since November 20th, right? And it formed a low close doji today, by the way. So the NYSE did also made higher highs, has divergence on its advanced decline. Here's your doji, low close doji. There's your sell signal. So we have a little bit of a divergence, and if you take a look about, you know, from peak to trough, you'll probably see that you can get at least a 2% correction in the marketplace on average. A lot of times we get, you know, these little sell-offs that are short-lived, but we get these little sell-offs. So what we have to do is make sure that when we do get a sell-off, the best of the best indicators that we're using, these respective advanced declines, looking at the breadth of the market and then looking at the volume to see if we make newer lows, but there's no volume associated with it, that means they're still looking at buying the breaks in the market. So we want to stay focused on that. So when we run and look for trading opportunities and run scans, we, number one, need to look at what the overall indexes are doing, what's the health of the market. And, you know, when we take a look at the Russell, for example, the Russell saw a clear breakout. I mean, clearly everyone can see this, right? There's your old peak and high in the advanced decline. And notice that we absolutely saw a clean breakout of that level. Unfortunately, there is no volume associated with that breakout. So now what I think in the adage, what goes up must come down, and if there is no volume associated with it, it's up to the bulls now to defend any pullback in this market. If you just ran a simple trend line analysis and just extend from this low, extend out to that low, and it intersects here, so if you extend that out, you know, if the market just regresses back to trend, let me get it exact. There we go. If we just regress back to trend in the next couple days, say, you know, down into this level, 1100 or so, 1094. I mean, actually, you know, it's not that big of a deal. You're at about a 2% correction in the marketplace, right? So if you get it immediate, if it happens in the next few days, it'll, you know, short term, it'll be kind of ugly. What we want to do is, if we do get that kind of correction where the market comes down into this zone right there, if we get back into that zone right there, what we want to do is to see what is the health of the breadth of the market. Did this thing crash and take out, make newer lows? That's what we have to monitor. That's what I mean by we have to monitor the health and the condition of the market to see if there's a sustainable uptrend or if this is going to be a more meaningful correction. See, we can only, as technicians, use the tools that we have to gauge the market by. When you take a look at a lot of these tools, and I mean, I can teach you really, I mean, seriously, and I have a lot of my traders in this room right now, and I think a lot of them will agree. I can teach you some very powerful strategies and very powerful analysis techniques, as well as entry tactics. And I believe it's going to help you become a more successful trader. And that's a bold statement, but I believe that. And you know what? I think that what we try to do, the techniques, and I found it interesting at the Traders Expo, people were like, but I'm not talking about stochastics, even though I learned from George Lane. I'm not talking about MACD. I'm not talking about Bollinger Bands. I'm really not talking a lot about RSI, CCI, or hundreds of indicators that are out there. And I mean, when you talk about all these indicators that are available, I mean, it would probably take you and I don't know if how many we can name, how many you guys can type in besides Fibonacci extension retracements, Fibonacci time extensions, cycles, astrology, Elliott wave, Gann. Gosh, we have we've been talking about, as far as equities, the index and indicators that are unique to this individual marketplace. And we've got the ARMS index, otherwise, you know, people call, you know, Dick Arms. I call it still the ARMS index, but it is what it is. Moving averages. You know, there's all kinds of averages, parameters that you can use. The open, the high, the low, the close, the pivot point, which is what I use and what I've been teaching for over a decade. Chart patterns, measurement objectives, head and shoulders, flags, pennants, wedges. Oh my goodness. Entry techniques. We talk about, you know, the 4 main points of interest, the open, the high, the low, and the close. Well, there's entry tactics around those 4 points of interest. If a market breaks out to the upside and fails, you stop yourself in. If it starts to break back beneath the opening range, that's a specific strategy as old as I've been in the market. I mean, you know, the 30-minute breakout rule. Gosh, I mean, we've got so many different indicators out there, you know, but yet a lot of people struggle with the market. With all these indicators out there, how are people struggling in the marketplace? That's the key. So, I mean, we've had an amazing move in the market. Not to mention point and figure. Jerome, thank you. Point and figure charting. You've got market profiling. You've got all these types of ways of graphing and charting the market. And candlestick analysis, of course, my favorite. Bar charts, of course. So we have all these ways of tracking the market that I think it makes it difficult for people. Maybe they get information overload. Maybe they're not following the right thing. Maybe they're looking at too many option matrix and looking at implied volatility and not making directional, the right directional calls in the market. Or perhaps they're trading on the seat of their pants or trading, you know, based on, you know, the feelings that markets can't go up and markets can't go down any further than they have. I'm not sure, and I don't want to. I don't want to ask folks in the audience, you know, how they've done this year, and I think the majority of you guys will say you've done pretty well. I hope, seeing as we've got a large portion of our students and my traders in this room, I'm hoping that you guys have done really well this year. So with that said, I think the psychology, you know, that's kind of the important and an important element. You know, looking at times of days to trade. What's the best time of day to trade? You know, here's something for you guys you may not realize, but remember back in the day we used to call it the noon balloon. Markets would rally at lunchtime. Lunchtime used to be the worst time of the day to trade. Now in the last 6 months it's actually been almost the best time to trade. We seem to make counter trend, or we seem to make nice trend moves starting at around 11:30 Eastern time, lasting into the full lunch hour. Day of the week, what's the best trade day to trade? Well, Mondays people go back into the market, but today they didn't, and typically you see pension fund money going into the market. So a lot of the information that you use to trade in the market doesn't always work. So that's why I said in the beginning, there are no guarantees. But what I like to use, and the indicators and the studies I use, without a doubt, seasonal analysis, person's pivots on multiple time frames gives me some hidden support and resistance levels, especially the longer term stuff. Health and breadth studies, as we talked about. Momentum. Momentum to me is the rate of change and the pace of change, and we get that information by looking and comparing closing prices to past price action. Where's the close now based on X period of closes ago? And of course, in futures, we can use a thermometer temperature gauge, so to speak, by examining the commitment of traders data. So I promised you I would share with you some of the scanning features that I use. This is from Bloomberg Terminal. This is the John Persons indicator, which some of you from ThinkorSwim may find this unique and interesting, but we have created several scan features just to let you know how we look for trading opportunities. And if you notice here, you see where it says MSFT, that's a U.S. equity. Obviously, you can see that's clearly an equity market. And notice what we have here. It says high close doji. And then look at it gives a breakdown of what the entry is, what the stop level is, what the profit target needs to be. So different time periods can be set on this, but just as it gives a breakdown of whether or not you want to take a high close doji in a trade, right? And this was the actual scan, and this is the criteria that sets up. And it's really neat because it gives you what the potential entry, what your risk is, and you can see it right in front of you. And we've created several different tools. This is Genesis, what I was using, my professional series package, which is really cool because I know a lot of traders have told me this, that they can't look at everything. You know, they mistrade opportunities because they have their eye focusing on one market, and they were focusing on crude oil all day, and then they lost track of the S&Ps, and then they should have been watching the euro currency, but the pound is the one that moved today. And on Genesis, what we set was an alert message that gives us whether they're low close dojis, whether they're regular PPS buy and sell signals on various time frames. And obviously, if you got a sell signal, a low close doji that acts, and you get a window that populates that says, by the way, in case you're not paying attention, red is sell signal, green is buy signal, and you may want to focus in on some of these buy and these sell signals. So those are the alerts that we've created. In addition, another thing that I like to use, and this is kind of a study that I use in my monthly newsletter, and I want to share this with you because this is kind of what we talked about last week. And this is an indicator relative strength chart that I created, and I want you guys to take a look at this because this is very, very interesting. This is very important. So notice that the yellow box, and the reason it's yellow, notice that the market peaks out, notice that it crosses a moving average, and then all of a sudden, notice what happens in time. The market trends lower. Then the market goes up, this spread goes back up again, and notice that it crosses over one more time, and look what happens, a delayed reaction. The market, after how many time periods later, we start to see a trend move lower. Then again, we see the same type of scenario, and guess what happens? Little delayed reaction, and we see a market trend lower. Now look what just happened. We just got that same type of situation, and what you're looking at in the middle section is a relationship between the NASDAQ and the S&Ps. Now, notice back here at the beginning of the year, on a percentage basis, the NASDAQ and the S&Ps were tracking right on top of each other, right? And as you can see here, the NASDAQ outperformed the overall S&P market. So we're starting to see things change. Underneath is a McClellan oscillator, and the McClellan oscillator is neither overbought, it's at a zero temperature gauge reading, it's neither overbought nor is it quote-unquote oversold, but it certainly is not acting when the market's moving up, it's not acting in a bullish fashion. So it tells me that perhaps this is another warning sign, a different way of using information, that market internals and also the relationship between the NASDAQ and the S&Ps has over-accelerated itself. And so therefore, my indicator has been acting more, this crossover, this black and this dotted line, is more of a leading price indicator. Now, this is about a 2-week sell-off. This is about a 10-day sell-off. This is approximately another 10, 12-day sell-off. So the market hasn't given us substantial sell-offs this year, but these are the big little declines in the market that has given us these little sell signals. And we've gotten some interesting indicators that have shared with us that we are seeing a market moving lower. Now, this is what we were talking about in Las Vegas a little bit, and it's called relative strength, and it's something that we've talked about for years. In fact, I did an article. I found an old slide from 2000, and I can't believe this. I found an old slide in an old presentation from a magazine called SFO. Do you guys remember SFO? Do you guys remember SFO? Stock Futures Options magazine? Well, it was created by the owner of PFG Best, so Russ Wassendorf Publications. The magazine's no longer in business, just to say the least. Anyway, in 2008, I did a big article on relative strength. I mean, that's 5 years ago, before it was ever popularized. And I imagine, what I like to do is we take a look at not as much as the stock and the stock sectors, but we looked at the relative strength within the S&Ps. I wrote this article with the S&Ps, the Russell, the Dow, and the NASDAQ, and compared it with where commodity prices were, gold, crude oil, and the euro and the British pound, I believe it was. So in any event, I still do that to this day. All right? And what I wanted to share with you is this is from the beginning of the year. This is the relative performance of the top sectors in the market. And many of you might not be aware, but it's the banking sector. It's not just the banking sector, but the KRE, which is the regional banks, up 40, well, they're not 42% today, but they were up the most. Notice that this watermelon pink color down here, utilities, only up 8.5%. So what we tried to get from relative strength is money chases money. And when you start to see crossovers, if you could follow this pink line here, when you start to see the pink line go down and other lines go up, that means there's an exodus out of one sector and they're rotating into another. Another way I like to use this tool that I created is simply remember the adage, money chases money. Higher highs attract money, right? So if the market's breaking out, and if you follow this green line, KRE had a breakout, saw a correction, broke out to new highs, rallied sharply, pulled back, and then just broke out again. So when you start to see an old high break out, you're going to start to see money being chasing into. So don't discount the adage, higher highs and higher lows is bullish for the market, because that's what this relative strength chart reflects. Now, this is the relative strength chart for the month of November. All right? Now, what does this tell us? Well, what it shares with us is that on opposite ends of this spectrum, utility stocks, I mean, just what I taught you, when you start to see a crossover, selling begets selling and buying begets buying. And so new highs breaking out, and also we're starting to see the XLV, we're starting to see even the financials like the Bank America, the insurers, the exchanges, things of that nature. They really all saw breakouts in mid-month of their mid-month highs. What I will be looking for, if we see breakdowns in these sectors against those mid-month highs in those performance of those sectors, the more sectors that start to fall apart, not just the overall index, but the more the sectors start to fall apart, that tells me that there's a more sustained, meaningful correction coming in the marketplace. Does that make sense, everybody? All right. Cool. Thanks, Herman. Of course it makes sense. So it's a way to gauge the health of the market. You guys, what I like to do is to train people how to become their own best analyst. I mean, quite frankly, what are you guys going to do? I mean, literally, who wants you guys to win in the market? You guys are retail speculators. Who wants you to win in the market? Let me ask that question. Who wants you guys to win in the market? Your retail speculators. Arthur and Les, you guys got it right. I do. I want you guys to win, okay? And you know, truthfully, so does your brokerage firm, because they're tired of trying to bring in new capital all the time. We got to get you guys to have confidence and faith in what you're using. And when you start to see a methodology works, it's proof, right? And when you use statistics, that's why they want you to, you know, they best say use backtest models. Use a system that you know that is repetitive, okay? Use an entry method that you know where you can control your risk if you're wrong. These are the things that are going to give you the power of confidence to make money in the market and to enable you to trade properly. So what does that mean, trade properly? Well, to me, it means don't be guessing and putting on a trade just to put on a trade. Don't be getting in and out of the market. Have a particular size, the amount of dollar risk you want, but wait for the right setup to come and then get into that trade. That's what you need to do, okay? Don't just trade just a trade. Get yourself into a trade based on a setup, and a setup that comes with testifiable backtesting, or at least using a methodology that says, hey, by the way, we've got proof in the pudding that typically when this situation occurs, we see corrections in the market, and that's very important. So, for example, here's a chart that from this year, and this shows the performance this year. Obviously, what's up here, and it's all color-coded. So brown is crude oil. Crude oil is almost unchanged on the year. It's up less than just up about 1% this year, right now, year to date. Gold is only down 27% year to date. So all the gold funds, you know, and this might be something that if we take out that June low, we're going to see more selling, and the reason is tax credit selling pressure in the market. People will take losses and offset those losses against potential gains. The pound, which is interesting, because the British pound is almost, you know, outperforming relative to the euro currency at this point in time. And of course, the Japanese yen's just sucking wind right now against the US dollar, down 16%. Bonds are down 11%. So at the bottom end of the scale are the weakest links of the investment community. And at the top of the spectrum, it's the Russell, a little bit over accelerated to the upside for on average. It's also a little more accelerated compared to like the Dow. So a spread trader might identify Russell may see more of a correction short term than the Dow, but overall you're going to probably see these index margins narrow a bit on a correction. As you can see in time, like take a look back in June where you had almost every single index right here in June. Look at this. They were all trading on top of each other in May. You see that? And in June, and all of a sudden the Russell exploded. It departed too far from the means. And look what happened. The Russell came down and the Dow came up, and they kind of met each other. And so we have that situation. So here's another testifiable piece of evidence that says, wow, why did I pick TZA out the other day? Where did I pull that one from? Where did we pull credit call spreads for December IWM? I mean, why wouldn't I have done a credit call spread for January? Why was I buying calls in TZA for January expiration versus IWM credit call spreads for December? One, December had a shorter period of time, and if we saw an immediate correction, there was theta that we could take off the table, right? And we would see more immediate results in a credit call spread in the IWM, right? And if the market did seem to see a bigger correction, TZA would have which is an inverse ETF, would have a much bigger move to the upside, and we'd get more bang for our buck. So there was a play with the deltas and a play with theta or time decay scenario while we were playing different strategies for different instruments, but yet with the same idea that we believe that the Russell has more room to the downside. How do we want to attack that situation? As a trader, what you need to do is look at what's the best way with a limited risk scenario to capture this type of a move. And how do you take advantage of learning? If once you do learn this kind of information, because it's out there, we're using it right now, as you can tell, how do you take advantage of it? How do you apply it? So that's a matter of just having, putting the pieces together of the puzzle and being able to come up with and pull the trigger on some of this stuff. So, I mean, I think a lot of you guys know that, relative strength comparative analysis is not something new. I mean, most of you guys know that, right? Yep, been around for a while. But how do you put it together? That's the key that we want to share with you. All right, that's the important thing. I mean, for my own traders, I mean, we have our own, breakout method. We have our own trend reversals. We have our own trend continuation setups. We've got, it's not just our moving average snapback entries. We've got our, the last conditional change set up for trailing our stops. We've got the HCD, the LCD. I mean, we're all over the board here with different techniques for order entry, right? And I think for basically, what we need to do is to say, if we have all these indicators out there, and many of you probably aren't familiar with what I'm teaching today, what do you need most to succeed? I mean, what really keeps human beings, with all these indicators out there, with all the power of all this information, what keeps everyone from really succeeding? It's obviously if you, I don't know where I saw this sign. It said if you, I think it's Google, or maybe it was Steve Jobs, the movie. I can't remember. We were watching on an airplane, but I saw this sign. If you didn't think you could fail at something, what would you do? If you thought 100% sure that you couldn't fail, what would you do? And that's what you have to have, the attitude in trading. If you feel your methodology is so sound that you can't fail, why do people fail? Oh, I missed the trade. Oh, I knew I should have had an order in there. Oh, I got out too early. Oh, I knew I shouldn't have gotten in before the market gave me that sell signal. Ooh, I don't want to put the trade on. There's too much risk. Ooh, I don't want to be wrong on this one. I've had 4 losers in a row. I don't know. Those are some of the main topics that I always get from people that tell me I just didn't trust the setup because of my last trade. My last trade was a loser. Hey, I'm knocking on the door here. There's a reason why they call it trading. Not every trade's going to be a winner. It's a cost of doing business. And that's a fact. So, too busy, miss the signal. Well, set alerts or get tweets and there's a lot of things that you can do to be proactive in taking advantage. Different things you need to do to take advantage of the markets. Don't put yourself at a disadvantage. I mean, it's like this. If you're day trading in the market, right, there's certain capital requirements. Some firms give you margin relief on day trading, and some firms just don't. So why bother with the companies that won't give you day trading relief, right? I mean, you got equipment requirements. You can't be trading off antiquated equipment. You can't be trading if you don't have decent internet service, right? You can't be trading effectively if you don't know how the dome works. If you constantly click on the market and it stops you in rather than puts a limit order, there's an important change that you need to make on your dome. I mean, these are things that you got to learn about when you're trading in the market. Where's the strength of the leadership of the market? Now, this is what this chart tells you. I mean, literally, it's as you can see, we've already started to see a decline in orange is the Russell. So the Russell is already starting in the last couple days to cross under all, notice this. So let me go back to this chart because this is important. Remember what I shared with you on this chart, that the Russell is way gapped a little too far from the Dow. So now what we're going to start to see is the Russell is going to start to underperform. If that theory holds true, then this is exactly what we want to see. We want to see orange start to go down faster than the other indexes from a percentage change. So looking at November, the market from just November's change compared to the beginning of the year, we're starting to see that change occur right now before your very eyes. So already it's underperformed. The Russell's underperforming the Dow. The Russell's underperforming the NASDAQ. And that's not even based on today's close, by the way. So we are starting to see relative performance. They're taking money off the table in the Russell. So trading priorities, directional ideas, setups. You got to have better directional ideas. You got to have a trading strategy. You have to have execution or entry levels or execution tactics. So are you going to get in on the market? Probably not. Are you going to get in on a pullback? Well, if you're using a limit order and the market doesn't pull you back and doesn't get in, what other type of mechanism are you going to get to implement a trade to make sure you're in the right trade? Do you stop yourself in on a trade on a breakout? Possibly. So there's several different things that you need to do to take advantage of it. Now, this is ThinkorSwim. And what I couldn't share with you guys at the event was very simple. These are the person's pivots. This is my charting platform. And up here, there's a scanning feature. So next I want to share with you real quick. Take a look at this. All right. The problem with ThinkorSwim, I mean the good news and the bad news. All right. The good news and the bad news. If you've never seen this page before, you go up here to scan. All right. You go up to the scan feature. And the first thing that you want to do is scan in what you want to scan. So you go over here where it says add study filter. So if you go over here, I'm going to X this out, X that out, X that out, we're going to start over. So you land on this scan page. The first thing you're going to do is go add a study filter. Notice that it just dropped down an additional box where it says ADX crossover. Click on the drop-down menu, go to license studies, and then go right over here to PPS. Let's try sell signals right now. So you got PPS sell signals. I want to scan what? Daily stocks? All stocks? That'd take you forever. What is your actionable scenario? Do you want to take a look at maybe Russell 2000 stocks? So let's scan and find out what popped up. Whoa! Now here's the thing. Notice where I've got my volume. I've got minimum volume selected at 500,000. You can change that to 800,000. And if I hit scan again, it's going to reduce the list. See where it says show me the list? So we'll go 500. Just see what happens. Okay. So basically, these are the stocks that populated that have 800,000 minimum volume today. These are the amount of stocks in the Russell 2000 that generated today daily sell signals. So looking at the percent change, you had a lot of stocks down 9, 2, 4, 3. Those are some big names. USG. You have to unfortunately know what a lot of these stock symbols are. But there is another way of doing this if you want to be sector selective. So you go down here to industry. So you say, what sector might be overbought relative to, maybe to really pinpoint things. Let's say you're interested in a sell signal, for example, in the small cap sector, that information technology. I can now look for, or healthcare. So looking at our performance real quick. So our second biggest is the banks and the XLF, but the KRE is really the biggest one. But XLV up 38%. So let's take a look real quickly and just run a scan on not that, but let's go to industry and let's go to healthcare and select all healthcare and say, did anything, whoa. So already we have all these names, and that's minimum volume of 800,000. I'm going to drop this back down to 500,000 and hit scan and see what pops up. So now I have a list of stocks that popped up today and generated not just any sell signal, but a PPS sell signal. I would say, you know, how do you look for trading opportunities? Well, the ones that are down like 9%, like Mygen, down 9.3%, you know, we start to take a look at some of these names. And another thing that you could do is take a look at, instead of daily, run a scan for the week. So for a weekly basis, more importantly, I don't know who SNY is. I can't remember. I can't remember the name of it off the top of my head, but SNY, I should know it. Sanofi, that's right. All right, so when we take a look at this stock, for example, it's been in a PPS sell signal since November 20th. But what happened is on Friday, it finally generated, or not Friday, excuse me, but basically what it's sharing with you on ThinkorSwim right now is that if today was Friday, and it's not, it will generate a weekly sell signal. So this is one of the issues, the good news and the bad news about ThinkorSwim scanning features. If you run a scan for a weekly basis, I mentioned this in Las Vegas, if you run a scan on a weekly basis today, it's Monday, it's telling you what stocks today, it's anticipating that today's Friday. So it's already giving you a heads up, a leading indicator of what scans are going to populate today and give you a sell signal at the end of the week, but it's based on today's prices. But if you wanted a scan on what generated sell signals last week, unfortunately, it's already deleted that list. So you got to run that scan on Friday when the market closes. Just like every day, like right now, if we change this over to a daily, and I run a daily scan right now, and this list populates, tomorrow morning when the market opens and I run that daily scan one more time, all these names are going to disappear off the face of this search criteria. So you have to save your search results. So there is a way in ThinkorSwim to run scan criteria. You want to at least kind of filter out some of the, you know, names that aren't really trading, and there's a couple other, you know, methods that you can start to select what to do. In my other platforms like Genesis, we made it relatively a lot easier, but this is a professional series package. It's a little bit different because I'm going to share with you some of the things that we do and what you're capable of doing, and just to let you know what scan criteria are out there, right? So first off, this is a list, John Person, this is a list of the S&P 500, names in the S&P 500 that are stocks above their 10-day moving average. Why would that be important? Well, there's 291 names, as you can see at the very bottom here, as I'm showing you. There's 291 names right there that are still above their 10-day moving average. Well, this is Union Pacific. It's breaking out. So not all stocks today were down when the index was down. And what we want to do is to try to capitalize on looking at the health of the market, the condition of the market. If the market's going to be bearish, then tomorrow we want to start to see that number decline. I don't want to see 291 names above the 10-day moving average. I want to see every day, I want to see that number go down. That tells me there's more of a weakening structure of the market. So how many stocks are above the 20-day? And then again, last but not least, how many stocks are above the 50-day moving average? So in the S&P 500, 368 names are above their 50-day moving average. So this is Ross Stores. Even though it's generated a sell signal, it's still above its 50-day moving average. So how about, I'm sure everyone would assume if a stock's below its 50-day moving average, it's probably not all that great. We have 130 names in the S&P 500 that are below their 50-day moving average, which probably means the market's gone nowhere fast, it's just gone sideways, and there's been no action in these names. This name I just punched up was Viacom. So this is below its 50-day moving average. Now this is Time Warner, and as you can see, it really hasn't gone anywhere, right? So, or at least not in recent history. This is Philip Morris, and the list goes on and on and on. So to me, when I start to see a stock like this, and I say, oh, well, my seasonal trend is not all that healthy. Typically, the seasonal trend goes down going into February, and this is Philip Morris, right? The seasonal trend goes down, but more importantly, I start to see this is a weekly chart now, folks. I start to see this kind of pattern here, right? Shoulder, head, shoulder, and I'm looking at a potential neckline. I would say, wow, more importantly, it's tough for me to draw that neckline. There we go. More importantly, there it is. I use the on-balance volume indicator. Man, if this thing breaks its neckline, if we kind of break down below that neckline, friends, and we break down below, what did I just teach you? If the market goes down, then the indicator needs to make a lower low. So if on-balance volume makes newer lows, then this stock has a potential of seeing at least an 8% move down. So I can say, gee, there's a lot of names out here that are below their 50-day moving average that are generated weekly sell signals. Well, here's Best Buy, and Best Buy today popped up, and again, this is a tricky stock because it's, you know, Cyber Monday. We'll see how that thing goes. Bemis Company, Abercrombie and Fitch. I mean, the list goes on and on and on about stocks, and this is A&F, Abercrombie and Fitch. The list goes, and again, this is a weekly chart. This is a weekly chart. So, you know, we really got to pay attention to a couple things when we're trying to look and scan for some trading opportunities. What stocks are in the right sectors? Is there a way to look for some bona fide buy signals? And just to share with you, we created this thing where we could go, you know, stocks that generate buy signals. And what we did was we broke it down to, as you can see here, I'll expand this for you guys. So what we've done is, in all the stocks that generated a daily buy signal, there's only 8 stock symbols. So when we run a name, we say, well, out of 8, 1 is Baxter, it's in healthcare, 1's Joy Global in industrials, and we break it down. So that's what's really cool, is to break it down so it does a lot of the heavy lifting for you guys, takes a lot of the headache. Now, this is funny because this was Friday's stock action. I just shared with you, and I just want to go over and review this with you real quick. So this is how many stocks, we're going to go right here real quick, long stocks daily. We had 8 names that generated, and look at the date, 11/29. So on the close of the 29th, we ran a scan, and these are the names. We had 8 buy signals that showed up in the S&P 500, okay, on an end-of-day basis. So how do we quantify whether the market's strong or weak? How many stocks on Friday generated daily sell signals? 38. Wow. Big names generated a lot more sell signals. And this one's kind of, to me, it's an interesting short setup, by the way. This is Harley Davidson. How many people are buying a Harley Davidson for Christmas? Do we have anyone? Is anybody interested in buying a Harley Davidson for Christmas? Les, it's not on your list? You're going to get on, got to leave now on your Harley. Okay. All right, so Harley Davidson has a very strong seasonal tendency to go down, actually. They don't really do well. Now, they've had some really strong international sales. They've got repair. They've got all kinds of interesting things that they've done. But I'll tell you what they also have is very interesting, is they have a low close doji from Friday. It wasn't just a daily sell signal. It's at monthly pivot resistance, and we had follow through to the downside. So a lot of the names here, one would think, here's another one, who is that? Kroger. This is Nordstrom's. Nordstrom's also generated a low close. It wasn't just a sell signal, it was a low close doji, and that volume wasn't that very helpful. So out of 38 names, I'm going to run down the list and say, whoa, wait a minute. 5 were in consumer discretionary, 4 were staples, 3 were energy, 13 names were in financials. Wait a minute, John. 13 names were in financials? That's interesting because, boy, the information here, the XLF, is kind of, showing us that it's actually been performing quite well. So we want to, maybe if we start to see more and more scans, and so what I'm sharing with you is maybe ThinkorSwim running scans, it's a way of saying if you believe in what helps to manifest a sell signal. This is part of what I help people learn how to quantify a trade or the markets. If you wake up one day or at the end of the day, you got a lot more generated sell signals. I'm not talking about negative price changes on the day. I'm talking about a bona fide PPS sell signal. If you got more sell signals today in the market than you do buy signals, then obviously you've got a better reading of the health of the market. So the PPS indicator is a very, very valuable, powerful tool. It's easy. It is so fantastic. And, for 33 years of trading, studying, and creating indicator, I think the results that have culminated into many of these books and courses, and of course, mentoring particular traders. We got some mentoring students in here tonight. I'd say it's a solid foundation based on select formulas and criteria. So I think this really, when you can say, okay, what are the tools? How do we measure? We need a measurement tool. And that's what relative strength, that's what the PPS is all about. I think it takes the pain and headaches, doubt away from my traders and students. I think that's what it does. It really does help to quantify what, when used properly, not just a buy and a sell signal, but it's good for that as well, but it really helps to quantify, the information to be able to say, gee, I ran a scan and I got all these sell signals. What do I do with it? Well, at the very least, logic says if you got more sell signals and buy signals, then something's not bullish, right? Doesn't that make logical sense? So at the very least, now I can start to maybe fine-tune my analysis technique, and that is how I think, well, that's how a lot of people use my Genesis package, but I think more importantly, these tools and tips and techniques, how do we put it together for you, can help you if you have, and I know a lot of you guys from ThinkorSwim have exceptional options educational background. You know the matrix. You know about implied volatility. You've been taught how to use implied volatility as it compares to historic volatility. You know how to do an iron condor. And you know all about adjusting. I think one of the first things they teach you is a trade adjustments. When you're in a losing trade, how do you turn a losing trade into a winner trade? What my message is, I think I can help teach you guys better analytic skills so you're studying more and focusing more on positive trades rather than bailing yourself out of losing trades. But that's how I feel about the market and what this information is designed to do in order to help you. That's the key. So, when I run, and I'm just going to run this right now in front of you here. Let's go and look at public, and let's look at the S&P 500, and let's just run a scan together real quick on toss, all right? And notice we got 65 names that generated daily sell signals today alone, all right? All right, fine. What about buy signals? So you go over here, and you go buy signal. Hit scan. Ooh, 7. 7 names showed daily buy signals today. And I could get rid of FRX up 9%. That's Dow Chemicals, up 2%. But I think that really does, and I can do that. And here's another thing here, category. Category, I'm looking for, is it category, is it public? No, here it is. Go into public, and I can start looking at ETFs, all right? So double short ETFs and hit a scan. So DXD ran a PBS buy signal. That's funny because that's just a double short ETF. So really you get a huge amount of choices. You can go all ETFs, so hit a scan. So how many ran daily buy signals? Now remember, when you do this, you're going to have to change. When you run ETFs, you got to alter that volume level because you're not going to get 500,000 in some of these ETFs. So see what happened? I just changed the volume, and look at this list that populated for all ETFs that generated daily PPS buy signals. So DIRT, DGZ, obviously looking at SDD. SDD, I'm going to bet, let's take a look here. That's the ultra short small cap, the Russell. So the Russell, so this thing just pops up and you say, oh, wait a minute, there it is, PPS buy signal. Yes, it is. It did definitely generated a daily buy signal. And you take a look at this and you say, gee, John's already teed it up for us. He's got his on-balance volume there for us. And I'd have to say, boy, interesting thing about this, I don't know how many people see price on the SDD made lower lows from October. Does everyone see that? Should I draw a trend line in there? Does everyone see that? Market made a lower low? There, I just took out the daily pivots, all right? So the market made a lower low in the ETF. Agreed? Look at the on-balance volume. So from this peak low, how come when SDD took out that low, how come there wasn't as much selling in the index or this ETF? We didn't see, we have a little bit of divergence there. So now not only do I show up in looking at the technique by looking at my indexes as I shared at the beginning of the presentation, but by running a scan and having the right tools up, the best of the best criteria searches, I can teach you guys how to look for potential trading opportunities. Now what we got to do is look for how do you trade the thing and when do you step off the train ride for taking a profit. So that's some of the key elements that we need to work with, okay? So with that said, tonight's presentation, I don't know, how did you guys like some of this stuff so far? So I just wanted to share with you guys that we made this presentation together, and really what I wanted to share at the event, and I started to share some of this, and some of you guys couldn't see the slides and through the little warning box that was up on the computer, which is kind of crazy. But I definitely wanted to say thank you all for being here, and more importantly, this is that time of year that I know you guys want to sit down and study and kind of reassess where you've been for the year, what you've done, what can you do better. So coming up into the holidays, we got 3 solid weeks of trading minus today. You got this week with the unenjoyment report. We got the FOMC, the minutes of the FOMC. And then after that, man, you're done for the year. Don't be trying to day trade just to, the rookie mistake. And then we start back the beginning of the year. And then we've got to, we got to deal with our leaders or lack of leadership, or the guys in Washington as they start to decide whether they're going to kick the can down the road or figure out what they're going to do with the U.S. Budget deficits and things of that nature. So we got those problems coming back into the marketplace. We got to figure out what the job market is and, how the economy, if it is going to improve, at what point does the Fed stop printing money? I mean, eventually the party's going to have to stop. One of two things are going to happen, and you guys need to focus on this. If it does stop, have they created enough liquidity to keep the ball rolling, and what sectors and what stocks are going to continue to maintain good profit margins? When you fire thousands of people to increase your profitability, it probably isn't going to do you great justice down the road. So that might help for earnings season right now, which this was one of the wildest earnings seasons I remember in a while. It was absolutely a binary event, right? Guess whether the market was going to beat or miss, and then guess whether it was going to be up 5 or 10% or down 5 or 10%. It was just an absolute crazy earnings season. And remember, we start that party all over again. Guess when? In about another 5 or 6 weeks. So I want you guys to, take this time, reflect, and also our annual holiday. I wanted to make sure that everyone had access to this. This is our annual holiday catalog. If you're interested in any of the material that we put out, you're looking for some incredible opportunities. We had an amazing offer in Las Vegas. It's actually in this presentation. This is our holiday catalog. All you got to do is just go over this cover here, click on these tabs here, and you can find incredible opportunities that we have, that we present. Just go right over these things. Our newsletter. We have PA stock alerts, and it's 3 videos a week. Tom Asprey and I do this. We're up 91% this year to date. Stock picks only, long and short. And like I said, today we just got out of CVC with a little over 9%, 9.5% on that little stock trade. So it's fairly active. We do about a trade a week, and we hold trades. We scale our stops, and we take half off. We do all kinds of entry techniques, great educational information, and there's a fabulous deal there in this yearly catalog. So I invite you. I clicked on the link. You can use that in your browser. Look in your email for this catalog. It's our annual catalog. We have our Trade Navigator, which I think a lot of people like to use as an alternative to building an in-house research analytic tool. It's just, I got news for you. I think what we've created for the professional package is just incredibly fantastic tool for serious traders, especially those who are looking to enhance their analytic skills in the marketplace. I know that ThinkorSwim, my favorite platform of all, is great, but they still, there's a lot of things that we could do, but nonetheless, I think for scanning ideas and for different tools, it's a fabulous product. And for those who do not have ThinkorSwim, I don't know why, but there are people that do not have ThinkorSwim. But in any event, enough of that. But I also think that if you're looking for any trading courses in there, we also had fabulous deals for our trading courses and payment plans there. And I think a lot of you guys would seriously enjoy a lot of what's in here from a 33-year professional trader. And with that said, I hope you enjoyed today's presentation. This was what we were going to present at the Traders Expo in Las Vegas. So everyone, I want to say thank you all very much. You guys, Overton says thanks for that profit. Overton, you deserve it. I'm glad you were in that trade. That was a nice trade, and I'm hoping you banked it. Now this CVC, you know what? We'll probably take a look at it. It's one of these stocks that may see a pullback, and we've had some stocks like Panel, PANL. We've had LifeLock, LOCK. We got into LifeLock at like $9, and that was a gift that just kept on giving. So I'm thinking some of these smaller cap stocks, one of the theme is, might see a pullback, and I think that's why you guys really should take advantage of this just in time for the holidays. It's an incredible package, and if you're looking to improve your trading techniques, some of these courses that we have, you know, and of course our Trading Trigger University, our flagship product, which really helps people get a good start for day trading and position and swing trading. Everything you need there to succeed, you'll find in this holiday gift catalog. I want to wish everyone a happy holiday, and keep in mind the techniques and the tools that I taught to you today, because they really do help give a better gauge of the market. And that's why I said they are the best of the best, and they are tools that I've been using for not just years but decades. So everyone, have a great evening. Have a great trading rest of the year, and we'll see you next year or in any other special event that does pop up. Good night, everybody. Thank you.